Hello, everyone. Once again, welcome back to my channel. So today I decided to bring you a quick update on Euro US dollar. It's been a while you saw me on the screens. Sometimes I believe that when you're so busy looking at trading from this perspective where you have to be on the chart personally and work things out, sometimes it's so not so convenient to, be online to share stuff, But I sometimes share my few information with my inner cycle group. So today I want to bring you a brief update on Euro US dollar. And I believe that if you look at this analysis very well and you look at how I'm going to explain, you can learn a lot of information from this video, okay? And I believe that for those of you who know my information, I'm purely an ICT fanatic. I trade with ICT's strategies, okay? And those of you who have really meddled with ICT's information and you're finding it difficult to understand a few information here and there and how to add up those information to make sense, I believe that I'm here to also help in that regards. How I've understood ICT's information over the years and how it has really benefited me. So I'm here to share that with you. And then let's jump to the video. And if you are new to my channel, please do well and subscribe to my channel. And I promise you that henceforth, I'm going to be more consistent with the information that I deliver to you. It's going to be more of like a daily basis, both currency pairs and the synthetic indexes. So you see the video mixed up, all right? Not necessarily mixed up on the channel, but you see information, coming up to you with either it's more on the synthetic indexes or on the currency pairs, solely Euro US dollar, okay? A few times I'll add on information from Bitcoin, BTC, and then another currency pair that I feel I need to let you know what's transpiring on market. All right, so quickly, let's jump to today's video. I have a few minutes to break things down for you, and then I believe that you are going to glean a lot of information from this video. So let's go to my chat, and then let's see what I have for you today. All right. So quickly, today we are looking at Euro US dollar, okay? You know how I do my analysis. Let's go to the higher time frame first. And then on the higher time frame, I have delineated something here for you to see where there's you had a market such as this happening. Okay, what do you see when you just picture such a market? What do you typically see on the market? And typically what you first of all look and see on the market is this form of consolidation that we had in here. So I'm doing a live, this is no more of like a lecture note. I'm doing a live chart analysis for you to see how I usually go about my work, okay? So this is a form of consolidation we have right in here, okay? And you can see how market has consolidated. This is a monthly time frame picture, okay? And after this consolidation, what do we have? We have price trading above this consolidation, closing with the bodies of the candle above it, okay? So giving rise to this form of market where we have price taking the buy side liquidity resting above this consolidation, and then this is the sell side liquidity, okay? Now, after price traded above the buy side liquidity, what did it do? It didn't just stay in there. It traded, consolidated all this area, and then what do we have? Price traded below it. Now, when you are looking for the ideology or the analogy behind what we call dealing ranges, you find a perfect picture here. Okay, so when we have a dealing range, what we are trying to say is that, or what ICT explains when it comes to dealing range is that you have an area of consolidation where a buy side is taken and then the sell side is also taken as well. And then what price does? Price retraces back into the 50% of that range, and then we see a displacement. So now, what did price do? Price has taken the buy side liquidity resting above this consolidation in here, okay? And then it came down all the way to take the sell side liquidity resting below this consolidation right in here. So we have this being the consolidation, and then this high to this low being a range. So on the monthly, you have a perfect picture of this high and this low being your daily range. Now, if you take your fib and you pull your fib, you realize that you have 50% of the range, which is right inside this area, okay, right inside this area. This gives you the 50%, where when we have a dealing range, we usually expect price to go into 50% of that range, and then we see the displacement. 50%, why 50%? So when you divide the chart into two, the upper half, okay, the upper half forms the premium prices, and then the lower half from the discount prices. Okay, so when we are seeking for more discount prices, we want to go and take our orders, our sell orders at premium prices. Okay, so price trades above the 50%, goes into 50%, takes sell orders right inside premium, and then we displace it down in here. So that's what we can see price doing. And notice when price got into 50% of this range, you can see price accumulating more orders right in here. Okay, so what does price do when we see this happening? Usually when we have an accumulation, we want to see price either do a manipulation, and then it does the distribution, okay, the redistribution, all right? Or just right after the accumulation, we have price doing, what's the name? What do we call it? The redistribution. Okay, so in this instance, we have price doing an accumulation right inside the 50%. Now, when you look into the 50%, we have a fair value gap from this date, okay, from this date. Let's look at the date well. This was somewhere in 2017. Okay, this is a monthly time frame. All right, 2017, somewhere in May. Okay, we have this fair value gap, which price traded into, rejected, go up, and then price traded below it. Okay, now you see that now, so far as price has traded below this fair value gap, okay, now it has become inverted. All right, that's what ICT says. When price has been, fair value gap has been taken and price trades below, comes back to it, now it becomes an inverted fair value gap. Okay, and our inverted fair value gap is happening right at the 50% level of our dealing range. Okay, so we are expecting price inside this dealing range to react to that dealing, to that fair value gap, okay, which is our inverted fair value gap. And you could see how price is actually failing to close above the fair value gap. And then we are seeing how the reaction is from here. All right, now that's it with the monthly time frame. Now let's look at another important thing I'm seeing on the monthly time frame that I would like you to see. Okay, now when you look at this, anytime we have more like an accumulation, you realize that price usually takes high resistance liquidities. Okay, high resistance liquidities. It means that price sweeps highs and lows. So you realize that there was this high in here. Price actually dipped into it, taking the high, swept the buy side liquidity, resting above this high, and then you see this form of rejection beautifully. Price didn't close above it with the body, so it dipped into, worked into it, and then we see how price has beautifully rejected, and it's trading downwards. All right, so this is a high resistance liquidity run. Okay, when we have accumulation, we usually expect price to be doing that. Okay, now let's look at the next thing we can see on the weekly time frame. Let's go down to our weekly time frame. So on the weekly time frame, what do we see? On the weekly time frame, we are seeing that price actually, yes, did what we are talking about. On the monthly, we saw that it was just a dip, but on the weekly time frame, we saw that it was more like an order pairing. Okay, it paired the orders right in here. See how price wicked, closed with the body, the candles, several times into, or several times above this high. Okay, so that's where we call order pairing. Price paired the orders right in here, and then we saw the rejection downwards. Okay, now beautifully, what were we expecting? Okay, so price goes into 50% of the level of the dealing range, and we are expecting a reversal. So what are the telltale signs? What shows us the price is going to reverse and all that? Now, let's come a little bit to this side. We saw that price traded, first of all, price traded into this area where we regarded it as 50% of the dealing range, which was the inverted, inside this inverted fair value gap. We saw the rejection down. Price came back again, closed above this, and then we saw this kind of movement in here. We know that it's obviously a bullish market movement. Okay, then anytime you have a structure such as this, okay, let me show you. Anytime you have a structure such as this, where we are expecting a reversal to happen, And we see market now begins to form higher highs, almost trending as a bullish market structure into this inverted fair value gap, or into an area where we are expecting, it is almost more obvious we are going to have a very sudden breakdown. Okay. And then suddenly we have this sudden breakdown when price traded above this inverted fair value gap and right in here, and we had this continuous sudden breakdown, okay, which caused a shift in market structure. When we take this this low and then this high, we had a market structure shift right in here. Once it broke the low resting in here, we had a market structure shift. And as we've had a market structure shift, what do you expect? We are expecting price to go back or to retrace and take down any form of liquidity resting in there, and then we see a market run. So we had a fair value gap on the weekly time frame resting in here, and then we had a swing high right in here. Okay, so price closed in on the high in here. And I told you that when we are in a consolidation market, this is one likely thing you're going to see, and which is high resistance liquidity runs. And this high was run with this wick right in here. Okay, it was run with this right in here. And then there was a low in here. You see price, after it has run this high, it came to run this low. Okay, so when we are in the consolidation market, that is what you usually want to see. Price running highs and lows, okay, at the same time, multiple times. All right. So beautifully, we saw price trading all the way back, closing in on this fair value gap resting in here. And we saw the rejection back down. Sorry. So price closed in on the fair value gap, and then we saw the rejection closing in on this sell side liquidity as well. And then we saw the consolidation continuing to happen. Okay. Beautifully, as the consolidation continued to happen, we saw the market picking another form of structure right in here. From this high, it came to form this low, from the high, a low, a high, a low, a high. So anytime we have a high, low, higher high, higher low, higher high, we know that we are in a bullish market structure. And just as I depicted to you and I explained to you in this instance, okay, the same thing happens right in here. Okay, when it happens and around an area where we are expecting price to reverse, usually expect such thing to happen right around these areas when price begin to do this. Okay, and beautifully we saw price doing that, and then we saw the rejection after it paired orders right in here from the low, from the higher high, and then we saw this sudden breakdown, which caused a shift in structure again right in here, a shift in structure again right in here after this low was taken. Okay, now beautifully price has traded below the inverted fair value gap. We have a structure shift right in here after it has paired the orders above these buy side liquidities. What are we expecting? We are looking for more lower prices. Okay, so this week, this was the week, that was the previous week, and then what happened was this week we can see how price has beautifully done all this that is here. You know, now let me show you another thing. When price has taken this high resting above this in here, okay, it has paired the buy side liquidity resting above this. Okay, and in ICT's studies, we know that price also runs on two things. It is rebalancing itself, okay? So it is seeking for internal liquidity and external liquidity. Now we have an external liquidity right in here. That's a high or buy side liquidity that has been taken. Then after it has been taken, we are looking for price to take internal liquidity, okay? So what are internal liquidities? These are the fair value gaps. And right in here, you may have a tiny fair value gap in here. The price had to rebalance itself, come back in here again. Okay, no, you may not see it clearly on this weekly time frame. Now let's go down to daily time frame. But before we go to the daily time frame, one of the things that you should also understand is that anytime we have price taking high resistance liquidity runs, which is this form of highs and lows running, price usually stage liquidity with low resistance liquidity runs. What is the low resistance liquidity runs? These are what the retail mind may say, they call it trend lines. Okay, so these are trend line phantoms. Okay, you find this low, another low right in here, another low. They don't take each other down. Okay, so you realize that these are lows that price would easily run. Okay, price will easily run this low. So now if you are on this market, this low is a target, this low is a target, this low is a target. We are not saying price may not reverse back to anything up here before it takes that, but then these are common targets that price usually rally quickly to sometimes sweep. Okay. Now let's look at everything on the daily time frame. On the daily time frame, you could see after price took down this external liquidity, which is this buy side liquidity resting above this, where price did the other pairing. What do we have to see? Now, beautifully, you could see how price had also taken the buy side liquidity above this high, okay, and gone higher to take above this high as well. And whilst price broke or took the buy side liquidity resting above this high and above this high, we have taken external liquidity. What do we seek to attack again? Now we look for internal liquidity. Beautifully, we see how price rallied quickly into the daily time frame fair value gap resting in here. There was one in here which was not fully rebalanced, and then the bigger one which in here price had quickly rallied and taken down this buy side internal liquidity, which is this fair value gap resting right in here. Okay, so beautifully, as price has taken external liquidity on a higher time frame, that's on a weekly, where is the nearest internal liquidity based on what is currently happening on the market? Based on either we've had the market structure shift, where is the next or the nearest draw of liquidity? Okay, so the nearest draw of liquidity would have been this fair value gap resting in here, because we have an external liquidity taken. We are looking for a better internal liquidity to be taken. Okay, which better or more obvious internal liquidity can we see? As price traded down all the way this area, okay, and see how this action price action happened in here. I'll take you into a little bit details right in here. And if you were here, you could have seen that the nearest target after here was going to be this internal liquidity resting in here. Now let's go down to our 4-hour time frame, and you're going to see what I was talking about with this kind of price action happening in here. You see this price action happening in here. You could see that this was a daily fair value gap. Let's go back to the daily. You could see that this was a daily fair value gap. Realize that price dipped into it, but never closed fully on the fair value gap. And then we saw the rejection down. Price broke below this. So far as price broke below this low, we obviously expected price to expand downwards. But then before that, where would you necessarily think that why would price reverse around this area? Now, on the 4-hour time frame, let's pull our fib. Okay, let's take a fib from this fair value gap and see where price actually did reverse inside the fair value gap. You could see that price actually reversed right in 50% of the fair value gap. Okay, right in 50% of the 4-hour time frame fair value gap. Okay, so on the 4-hour time frame, you realize that, see, price dipped into a 50%, and then we saw the reversal. It happened beautifully on the 4-hour time frame, 50% of it, and then we saw price reversing. Okay, so beautifully, that is how price did the reverse. On the daily time frame, you may have not seen that it was on the 50% of the 4-hour time frame. So if you're on the 4-hour time frame, that's how come when you're trading, ICT encourages we delineate between the time frames to understand what is happening on this time frame, what is happening on the higher time frame, so that it gives you more clearer picture. If you are sticking to only lower time frame pictures, you may easily not do well with your trading. Okay. Now, beautifully, you could see how price traded below it, and then when price traded below it, we expected, as price has traded below this low, obviously we don't expect price to go above this. So where were we going to frame our trades and see how price was going to bounce back down? Now let's go down to our 1-hour time frame where you could be able to catch the daily trading. Okay, so on the daily time frame, we could see how we're going to catch our daily trades. Now let's look at how we're going to catch our daily trades. Okay, now beautifully, this is where price traded below that price, and we had this day where we had news event, and you can see how the market moved haphazardly. Price opened, the 2-day time price opened here. Price traded above the open price, came down all the way to this area, traded, closed in on this fair value gap, traded high into this area, never closed above this high. And you could see, just as it didn't close above this high, it still had to do some form of consolidation right inside this area. Okay, right inside this area, we have price gyrating high, low, high, low. Okay, now beautifully, let's see this price action right in here. Even as price closed in on this area, on that day when price opened here, it went lower, went higher, and then traded lower again, went high, almost to the high that it had formed during that day. Okay, so you could see how this fair value gap right in here, price traded into, never took down this high, and then you saw the breakdown. Okay, it's as easy as that. Whilst price traded below the daily time frame leg, okay, well, we never expected price to go higher, any more higher above this high. This is what price did. On that day when it opened, price traded. On this day, it could have avoided the market anyway. But the next day, this is what price did. Although it consolidated, but inside this consolidation, you could have found a very beautiful trade right in here. Where price opened, price went above the daily opened, traded below it. Whilst price traded below this daily open price, and then below the swing low, we knew that obviously there was a shift in structure right in here. So we have this low, high. Okay, so this high, it doesn't hold. So this low, we have a high right in here, and then a low, a high, a low, a high. Then we break structure. Obviously, this fair value gap resting in here was more active. Okay, the price gyrates straight into it, never closes above it, and then we see a breakdown. Even if this market was form of consolidation, it couldn't see the way forward. Just right as the next day, see what price the price opens here, trades above and closes below it. Let me show you all these things are happening within a specific time frame. That's how come ICT trades and ICT makes us understand that, look, trading on the market involves some key and major components. When you're on the Forex market, we are looking at some specific time window. We are looking at the London session. We are looking at the New York session. Okay. So beautifully, when price did this, you could see on this day, price traded above it, came down, while price traded below the daily open. You see how it left this fair value gap and then this fair value gap and came all the way. Look at this time of the day. What time is this? What time is this? Price trades all the way back into this fair value gap, and then we could see how beautifully priced. So from all this high all the way to this low. Look at how beautiful you could take as 35 pips right in here. As beautiful as that. Okay, and then the next day, price opens right in here, trades above it at the Asian session, and you could see how price traded below the swing low, and then it forms some form of consolidation. And let me give you a clear picture of what transpired right in here. So you could see on that day, you might have not really gotten some better trade because price traded above the daily open, gyrate, and then in as much as we know that we are in a bearish market situation, you always hunt for. So understanding of the market structure is a key component in making your market in your analysis. Okay, so in such a situation, we know that we are in a bearish market situation. Why? Because when you go down to when we go down to our daily time frame, we know that we have shifted market structure. We have seen how price has reacted in this area and then closed below this swing low, okay, where we're not expecting price to come up in here again, and we are seeking to target this buy side liquidity, internal liquidity resting in here. Okay, so beautifully, it gives you more clear and concise picture of what you are expecting. So when the market does something, you know what to expect. Okay, now beautifully, we saw how price closes, and then the next day it does the same thing. Now let's look at what it does here the next day. So market opens right in here. So market open right in here, and what does it do? Goes above the daily open, closes below the daily open, and see how market trades into this fair value gap, and then we see a rejection. Price comes back on another day, taking all this high. So you see this high resting in here, this high is resting in here. Okay, insofar as they had not fully rebalanced this fair value gap, it was incumbent the price, and it was more like an accumulation. Okay, so you see on the 1 hour time frame, we have an accumulation happening in here. So let me give you a more clear picture. 1 hour time frame, you see an accumulation happening in here. Price goes down, goes up. What are we saying? We are saying that we have more like sorry, what we have in here, we have a dealing range happening in here. So you have your dealing range low and dealing range high. Okay. Now price goes the low, goes higher, and then it breaks down, reverses into a fair value gap right in here. And then you see how price continues the accumulation right in here, goes higher, lower, reversal. So now you could see how this high too has been taken because this was also in an accumulation. Okay, so price rates this buy side right in here, and then it breaks down further. Now let's look at if we're in today's trade, what would we have done? Okay. Okay, so beautifully, let's say we were in here. Okay, we're in here. Today, the market opens right in here. And then what did the market do? So market opens, trades higher, sweep the buy side liquidity resting above this high, and then reject below this. We have price trading all the way back into this area. Now let's pull a fib. Okay, from this low to this high. Where is the 50% level? Price reversed almost into the 50% level, almost into the 50% level, and we saw the breakdown. Okay, and we are seeing this low as an ultimate target for price to really sweep this low. Okay, price could also reverse back into this 50% level or come close in on this fair value gap before it continues down. I mean, it's a likely good event, okay, but ultimately we are not expecting price to trade above this high. Okay, so if price doesn't do this, goes below this, and the next day being Friday, you want to expect price to either come close in on this fair value gap and then rally. I mean, anything is possible. Okay, so beautifully, these are the few nitty-gritties that's happening on the market. Now, you would see that on a daily time frame, we have closed in fully on the fair value gap resting in here. We see this down close candle acting as an order block. Could price go below it, or price would reverse and also seek for liquidity resting above before it continues? So Friday, we are looking at what can possibly happen tomorrow, and then we know how we handle things on the market. So when you go down to 15 minutes time frame, this is what you are seeing on the 15 minutes time frame. Okay, so market has formed this low, high, a lower, higher, low, high. So it's forming more like a bullish trend right in here. Okay, so if we have a further breakdown, it can take this liquidity resting below it, and anything is possible. So you could see how beautiful all this form of accumulation had happened when price opened and price traded above it, below it, giving us a dealing range. Okay, so we have our dealing range being this. Then we could see how price can trade back into this dealing range, and then anything happens right in here. So beautifully, this is how the market has been faring with Euro US dollar. I wish I could have more time to go deeper onto the smaller time frame for you to get a more concise picture of how your entries could have even been taken and all that. But then the time is not on my side. Time is not on my side. Now let me show you on the 15 minutes time frame as of yesterday. You could see how we had this price, and then how market structure was shifted right in here as we have taken the buy side liquidity resting above this consolidation, and see how beautifully price rebalances itself after the market structure shifted in here into this fair value gap. What time of the day was that? What time of the day was that? As beautiful as that. So guys, today I want to leave you with this few information and this little information that when you're analyzing the market, look at it from this angle. If you are new to my channel, please do well and subscribe for me. I'm coming your way with more relevant content, and then we'll see how we go about our trading. I believe that we are going to be more successful in our trading. If you are going to be consistent, just stick on the market, keep learning, keep updating yourself with more relevant information from people who give you good information. Okay. All right. So I want to leave you on this note. Say subscribe to my channel. Please like, share. You can leave me a comment in the comment section. I will get back to you